Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday evening, the 18th of August, 2020, about 6:20 p.m. Central Time. I've been doing these a little later. I don't like that. I'd rather be doing them at 5, but we have been swamped. That's putting it mildly. A lot of trading in the metal markets, a lot of trading all over the board. The currency markets, they've really treated us well this week, so what do I have to say? I'd rather be late. All right, let's talk about the events. You know that the second day of the Democratic Convention's going on. Tomorrow we're going to get the FOMC minutes. They're going to come out around 1 o'clock. We don't get a lot of real important reports until Thursday again. Actually, they start kicking up just about tomorrow and Friday, so I'll be watching that. Obviously, as Thursday comes, what are we going to be watching? We have to watch the unemployment claims. Anything under 1 million is considered good news. Anything over 1.3 is probably going to be considered bearish news. So that's at least how I'm viewing what is going on in the market, and it might be something you want to consider both ways, and you want to pay attention to those reports. Bond market and note market, a little bit of a bid today. You know, there is something I want to make mention of. A lot of you think that if you watch these videos, you are getting what I do in my subscriber videos, be it the ETF in the afternoon or in the morning. You're not even close. You're not even the equivalent of both hands behind your back. You get an idea here of what the market's doing in a nice summary, but nowhere am I going to tell you in these buy here, sell there. That all happens in my morning futures video that I post at 5:40 in the morning. We'll talk about that. But I get people that say that I crack up. It's not the same, okay? I don't even think you're going to the same destination with this, because nowhere am I telling you I think you should buy here, sell there. All right, let's take a look at where we're at. New high. Market running to the upside. It's taken since March. You realize this is a 55% gain? And I've got to tell you, back in April, May, thank God I made the statement I did. This reminds me of that last break. And I know I said it. And I got my mind turned into that, and it didn't leave me behind. No, I wasn't able to buy the low, and I'm still in the market. I don't know too many people that have, including Warren Buffett, okay? But I have, as a trader, done my fair share of buy here, sell there in those markets. And all you could say is the trend continues up. We properly looked at the market back about here. I'm just trying to get there now. Remember, we had this break right through here, and I said, now we have to see, after the market does it, when you took out that high, I said, now we see if this market can run again, because you've gotten over that pause. And as it turns out, that was the right analysis in looking back at it. When you look at this move, the question is, are you long it? All right. Number two, as you're looking, it's still climbing away on you. The pattern remains one of higher lows and higher highs. To get a stall in the market, you'd have to take out right over here this break low on the swing line, which is 33.50. And you are up now pushing the 33.90 level for all purposes. You are well over the 18-day average of closes, so that is not the number that is letting you into the marketplace. There is another moving average that I discuss in my morning subscriber. I point it out, tell you about it, and act on it in that update. That's where you get that. And now the question is, where is the next phase? The resistance is the upper Bollinger Band. So what the market had done is back here, it married itself. I call it gorilla glue. It had just tied itself to this, and then it started drifting away from it. That became the big question when you look at the momentum with the market. What's going to be next with it? And you kept the bullish momentum. I call that embedded. When it's embedded, you're looking to be a buyer on the break. That's what I think the pros are doing. And that's what you've done there. You've backed away, and now the question is, can you get back up to wherever that Bollinger Band goes, or will this market stall here and give us another corrective move that may even get back to the 18-day average of closes? We'll have to wait and see. I don't have that crystal ball. When I look at the NASDAQ, it's reinstated itself. Hello, new highs, I'm back, and that's what it's done. Embedded, new highs, and this market has said, I'm back to play. We'll see if it can get up to that 11,522 level. So if you thought the tech stocks were no more because people were doing rotation into some of the Dow, the S&P, and some of the other areas, well, that didn't prove quite true with a new high. The Dow is not in that category, my friends. I realize people have rotated there. It is a laggard right now. And so you'll see is the Russell. So this still has lower highs, lower lows, not going for those all-time highs, but it still has an embedded reading. Until the red line closes under 80, I contend it's a setback, just like we saw in the S&P, and it might wake up and say, don't leave town without me, and decide to join. Of course, if the other's correct, this may decide to correct with it too. And as I said, the Russell is a doggard right here. Why? It's losing its embedded reading. I don't want that. I don't want that at all. I don't know if that's signaling the others are going to lose it or not, but when you lose the embedded reading, if it stays lost, it's a sign that the market wants to return to that 18-day average. You'll say it's only 32 points away, and I agree. But it is a correction, and it says not to be long. So as far as I'm concerned, this is the one index that is now the doggard. It is the one I don't want to deal with, right there. Then we look at the VIX, and as I mentioned, I think the pros threw in the towel when they wrote the 2110. Right there is where I think they wrote puts to get back to the 18-day average. And I think it's a smart move. What you shouldn't be doing after that happens, that first test, is coming back down and getting under these numbers. When you do, you can run much further, and where do you get out? So I think they put that together. You may at any point get back to that number, but it's a lot lower than it was when they were writing it all the way back the first time it hit it. They had a shot there of $2. All of a sudden, they're down to $1 before, if you hit the 18-day average where it is. Again, money management, understanding momentum, and when something that works stops working, you back away from it. That's what I think they do. In the T-bond market, right here, the 100-day average is right now an area that's offering on the bounce some resistance to the marketplace. Now, momentum is oversold. You have a pattern of a higher high, lower low, and in reality, you went from an upper Bollinger Band to a lower one instantly, and you're back to where about the first time you hit it was. That is not a surprise to me. I don't know what this market wants to do. If the market's going to get bearish, it's got to take out today's high right through here, and this was for Tuesday. Remember, we're going to be in Wednesday tomorrow. I hope you realize that. Today is Tuesday, tomorrow's Wednesday. I hope I wasn't saying all this that it's Wednesday. If I did, I'm so sorry. But as I look at this, what's happening is I think the market is going to 177.11 if you take out that low. That is something to be concerned about. Why? It would give you lower highs and you have a lower low. Countering that is where you're at in the momentum. Now, in the momentum, I want to go back to the close today. Both numbers were under 20. The day before on Monday, they weren't. I'm not worried tonight yet what they're doing and why. If you break down and start down again, I know both numbers will get under 20, especially if you stay down in this general area through here. So that's my fear, and that would be higher interest rates. Could the Fed notes tomorrow, Wednesday, when they come out, I'm going to be saying that over and over, do that? Yeah, it could, but I can't imagine why. I would imagine that the notes say the Fed's going to do everything and anything it can to support the economy, which is the opposite of interest rates there. They're saying we are permanently going to make the market liquid. In the 10-year notes, we have the same pattern, a higher highs, lower low, a vertical price drop, and a bounce in the market. This one's got the 100-day under it, so this was the real support zone, very different than the bond market. And you'll say, well, they look similar. They don't. This was a fully different play, a lot more support in there. Resistance is 139.21, unlike the bonds that might be able to start an embedded process for long term. You're not even remotely there. You're just oversold in this market. In the dollar index, I have a theory, doesn't mean it's right, but I teach that the first time you hit a Bollinger Band after you've gotten back to a key moving average. That's a zone that the pros like to lift shorts at if you're dropping, longs at if you're rallying. Do we understand that? Nothing I know works every single time, but it's a high probability to do that. And nobody goes broke taking a profit. It's really simple. What about the euro? It's the same thing. You had been down to the 18-day average after hitting these numbers. You fall back and like a pinball machine that you tilted. Hit the reset button. The resistance is back up there. And what the market did is it went to it and it's stalling at it right now. I am not bearish this market. I am bullish, but it is overbought. The dollar is oversold, and you've hit targets that are trending, and you've hit some upside of targets. In the Japanese yen, I don't know how to trade this market. This is a vertical price decline, another rally. So the guys that are making the money in this are picking a low point and getting lucky and riding it. They're not following trend. They're contra-trend traders looking for just momentum. There are techniques like for that, around for that. Most markets don't do this, and this is not normal most of the time. The yen certainly did it here. The break was as severe and it's back up. But if you go back on the chart, you really don't see that very often. You get it. Why? Because the yen is the currency people run to for some crazy reason when they're convinced that something's not right in America, or it's called a safe haven play. Everything's getting so bad, I got to own the yen. And as fast as they own it, they dump it when the markets look like they've gotten out of that safe haven play. That seems to be what does it. In looking at the Bitcoin, I'm noticing we have higher lows, higher highs, but divergence. Your momentum's pointing down, which answers why price is dropping back. Plus, this big slope down in the Bollinger Band is going to be a resistance point in that market. Should have a hard time just blasting through it. Now the differential between Oct Brent and WTI. You can see you got up here to $3, back to the 2.25 zone, and sort of just laying there. And when I come into these energies, as I've told you for about a week and a half now, when I see a pipe, and that's what I call a pipe development, I think it's untradeable. I think you mentally get all screwed up because you're looking for the breakouts that typically don't happen. You're looking for the breakdowns that typically don't happen, and you waste your mental energy, and it absolutely impacts you on other trades. So when I see them, you know what I do? As fast as I can, I run away. I don't even pay attention to the chart. It'll tell me when it's doing something else. I pay attention in gasoline. It's trying to bend that number up. Is it going to be able to do so? You know, typically we're going into the end of the summer. We're going to get more driving. I'm aware of that. There could be a seasonal move there, and it's trying to embed. You don't see that really going on, if I'm correct, in the other markets. See what I'm getting at? So my eye is on that one. That is one in the gasoline I am paying attention to. Natural gas, embedded reading. You know, while you might think that, oh my gosh, this market not going to be able to hold, remember this. As we keep losing wells, as the permits to drill more wells keeps shrinking away, what happens is you don't get as much natural gas production. And then you start chewing into the supply. So that's what I think this market is saying. I think there was a shift in it, and I think you pay attention to that. So as I said, in these videos you're looking, I appreciate you watching them, but don't take them for anything other than what they are. What I think the pros are doing, giving you a broad sweep of the market. The exact thing to do, if you consider me a pro, I will give you my ideas in the morning on these if you're a futures trader. I start recording about 5:40, typically by 6:30, it's posted Chicago time. I'm going to be telling you before you even get going what the morning news is like. So I'm going to tell you what happened in Asia, what's going on in Europe, what the markets will focus on, the upcoming reports of the day, what the estimates are, how the market might react to them, and then we're right into the chart action because we're already at that point into some 13 hours of trade already. Yeah, when I'm doing that, we're already 13 hours. Remember, trading starts at 5 at night. Cover all these markets in this sequence with the slide bar on our website. You can get right to the area you want. So if it's only interest rates, bang, you're right there. If it's only the currencies, you slide it right there. There's a small charge. I use the word small. I know these advisory services, hundreds of dollars. $7.95 to give it a try. It's the price of a big Starbucks practically. So what do you do with it? 30 days, get to see it. If you like it, that's what it costs. If you want a year subscription, we take it down from $15 every 30 days. You pay it all up front to $13, non-refundable, and away you go. We get plenty of people that do that. So if you'd like to try this, go to our website, go to the word research. You'll see everything we've got there. Even have the webinar up that I just held this Sunday. You have a great day. I'm Ira Epstein.